Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. Roll time, right? Good God. We can't look at this, guys. Like, my strategy is you buy it and you know that you gotta get spotted. Yeah, but we all think you're crazy. You don't fight this. No way. But the markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It's Friday. That doesn't sound, I don't know, my microphone doesn't sound quite right to me. It's okay, whatever. Let's go to the charts here real quick. I gotta go through this. So, well, S&P 500 yesterday was like a real dumpster fire. It took a while for it to get going, so by the time we left, it wasn't so bad, but then the rest of the day, it just kept going. It was so bad. Over here in the treasuries did move lower at, a little bit lower after we left, I think, yeah, but they did recover quite a bit. It actually came back to about where I had gotten out. Because remember, I was like 2.931. Right now in the 10-year, we're at 2.904. Okay. So you kind of got that going. But there's a really big spike of buying coming into the treasury market here on the open. I'm not sure what the cause of that is. I am getting headlines from Putin talking about, definitive results in peace talks would, for him to talk with Zelensky and stuff. So it could have something to do with that. I don't know. Oil took a little bit of a hit yesterday, but it looks like they're okay in the end. Natural gas also, well, they started a move yesterday, but didn't really go anywhere. Silver and gold still very, very pressured. And copper too. So I think that you're kind of seeing a little bit of concerns about growth in China is, I think, kind of the big, how do we say, the big concern out there, in addition to the interest rates rising, and that's kind of leading to the market that we have today. And that kind of makes the situation difficult for us in the treasury. Here you can see Bitcoin taking a really big hit yesterday, and I'm a little concerned about what the weekend might hold for them. And then we got the dollar coming back up into the higher end of 100 again. So I know there is some fear out there, I think. But where it's going to go today, I don't know, especially now that we've already missed this huge move up in the treasuries. I don't really know what's going on there. It makes it really hard. It's a really hard trade today. And I'm super late, right? It's already 6:30. So are we getting we are getting Canadian numbers here. ECB President Lagarde speaks at the top of the hour, and then we got some PMIs later. So, and we got Yellen speaking. We got a couple of late day news as well today. So, well, we got some things to talk about. I got to deal with this dog. Okay, so I got a big problem. The dog loves me too much, and when I leave, he starts whining, and my wife, won't just sit there and let him stay in the kennel. So she brought him downstairs. So I think what we're going to do is we're going to try and train the dog to sit on the desk quietly. You think we can do it? I don't know. But what I'm going to do is I'm going to go and I'm going to grab the cage, bring that in here, and then get some treats. And we're going to see if we can train him, all right? Okay, right here. Right here. Stop, 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 stop. Lay down. Lay down. Good. Lay down. Good. Stay lay down. Good boy. Yeah. I'm just going to feed you little treats here. If you just stay there, right there on my desk where I can look at you, and you just stay there. I wish you guys could see him from the camera. Need like a dog cam or something. Well, the treasury sure came back hard off of that while I walked away. No, no, lay down, lay down, lay down, lay down. Good. Good. Lay down. Good. Good. You just stay laid down like that, and you keep getting treats. Good. I tell you what, the kind of treat that I've got here, his dog gets so effing excited about it. He just loves the treats. Good boy. You just lay there, and you just stay right there. It's a good boy. A good boy. There's got to be some news here. Now let me use my mouse without touching me. Okay, yeah, there we go. Okay. Risk banks, Governor In gives this is not a period of normalization, but new policy. Goku. Good boy. You just stay right there like that. You can just sit right there on the desk. If you don't touch any cables or bite anything, don't bite my hand. Right? Good boy. Patience breeds performance, and performance doesn't just happen. It takes brave experimentation and consistent consolidation before you can conceive. You know what I want to talk about today is I want to talk about like the higher like what do we say, like the highest kind of top down approach of trading, because I think that seems to be the place where people have the hardest time. Like y- people think that you're just going to come in and I'm just going to watch it and eventually I'm going to figure it out, right? And the problem is that like markets change a lot, right? They're very good at fooling you, fooled by randomness, right? There, you missed a little spot right there. There you go. Fooled by randomness. So you kind of you got to do certain things to really be able to stand a chance longer term. It's like, and it's really hard because it's like you can't necessarily just use what you see on the internet and what's popular, because the edge of that is already going to be taken out. But you can't just spend a weekend trying to find something and then expect to find it and have it work forever, right? It's hard to develop a strategy that has enough data, right? So a really good solution to this is backtesting, right? You can backtest things. But I think the other thing is like using research and kind of using a combination of things that work, and versus what seems to be going on in the market at that time, and so forth. I don't know. It's kind of a difficult thing to dissect. We've been doing this for 5 years. How is your vendor business doing? Yeah. You know what? I don't really work on or think about the vendor business all too much, to be honest with you. But well, since we changed our indicators, the indicators in particular, to you buy it one time, I've been getting a lot more people buying it and a lot more people talking to me, which is really the important thing, right? Because that means that we can make it better. So somebody yesterday actually did identify, I wouldn't call it a bug because they were kind of doing something wrong, but something that I can improve in the spreads, because if you put the wrong instrument in there, it doesn't really tell you what's wrong. So a way of sorting out what's wrong with the instrument, right? Um, but I mean, it's not a ton. I have to say, no, lay down. Good boy. Good. I need you to stay laid down. How long can you stay laying there for? Hmm? You let me pet you? Yeah. No, let me pet you. I know you can smell it on my hand. Good boy. Did you try to build a system based on ninja options? Well, okay, so what we've done, I have found some things just through NinjaTrader. I mean, like I've built things in NinjaTrader that show some efficacy, and you can learn a lot about certain things. Okay, so like one of the things that I think is kind of interesting in the system building process, and I didn't really realize this until I read another guy's book, and this is somebody that has also posted some stuff on NinjaTrader, but he also does stuff in TradeStation, I guess. But you know, he was showing a bunch of different tests, and all of his tests, the strategies were not profitable, but it did show that certain options worked better than others, right? And so there's a lot of that you can learn from NinjaTrader, right? And from backtesting, that like certain kinds of strategies do certain things to your performance. Some things make your drawdowns bigger. Some things make your average profit more consistent. Some, you know, that sort of a thing, right? Then on top of that, we learned a lot about order flow just from building order flow tools in NinjaTrader. But the problem there has been that we really don't have, you really don't get enough data. Okay, no. Right here. Over here. You stay there like that. I know, you want it. You want it real bad, huh? You're being very good. Good boy. This is a great spot to sit, isn't it? I mean, I wonder, you know, if I can get you to stay here for like 5 minutes, then maybe I give you another one. Well, maybe not. Maybe this is all the training that we can do for today, and then from there, I'm going to have to put you in your cage. Actually, maybe I should just do that. Okay, come here. Come here, bud. I want you to go in your cage now, okay? Here we go. Hello. He's probably gonna whine at us now. But I got a few more pieces. Let me give him another piece right here. Since he's sitting in there quietly. Sit. I guess not. You're gonna sit quietly. Sit. Sit. Good boy. There we go. Anyways, the issue with a lot of order flow setups, we found some that were look really effective in the short term, but they're like really short. They're really high frequency trades, so your back tests aren't going to be as accurate, and we really just don't have enough data, right? And especially not having like historical level 2 kind of stuff. So I think that there's a lot of work that needs to be done there. The indicators that I have are really, really good basis for that. And I just haven't quite had the time to take it a step further. You get what I mean? I might have some time to work on that this weekend though. Right? So, but you got to remember that the stuff that I have that are in my indicator suite is a little bit more than that, right? Like I have all of my level 2 filtering and histograms and stuff, which I think are really useful for trying to build a high frequency trading system. But we also have all of these things like spreads, and I'm going to be adding in the statistics tools and the yield curve tools and things like that. So like the spreads in particular, I'm just really shocked that NinjaTrader still doesn't have an indicator for that. You know, I really think that it should be built into the thing. We could probably improve that. I have some plans to improve that indicator too. So it's really something that I feel like everybody that uses NinjaTrader could use. But, you know, I don't spend a whole lot of time marketing it or anything like that, you know. I think that if it was like if the YouTube channel was like had 50,000 subscribers and stuff, maybe it would be worth it to me to spend some more time on it, you know? But I feel like that right now, you guys, you know, the primary thing was to get these tools out to you guys so that you guys that are really active and everything can make use of them. And the whole like going out and getting the whole world to know about it, you know, it's just going to be word of mouth for now. And maybe at some point, because right now you guys get more value out of me making videos and me doing my own research and getting into machine learning and things like that. So I don't know why you ask, how is your vendor business doing? This weird way of putting it, though. I have to say, I don't like, there's some other creators that, man, they sell indicator suites that I don't think are as impressive as what we've got. And they're charging like $1,000 a pop for them. Like, oh my gosh. So all you got to do is get like 5 or 6 of those a month, right? And when you market super, super hard, you can find them. You market super, super hard, you find them, right? Probably could make money doing that, but I don't want to be like that. You know, I'm not putting the indicators out there for like to make that my sole source of income. Nah, it's too inconsistent, anyways. Well, he's whining a little bit. You're doing good. It's a good boy. Yeah, you just lay right there, and maybe you will get some more treats later. So I have more treats here. If you're quiet and you lay down, okay? Arf, arf. I don't know. Can you guys hear him in the background? He really does a good job of making the most cute and pathetic sound possible. This high pitched squeak. And then if I ignore him, he just makes it more weird. He just makes it sound more weird. Man, these treasuries sure are bouncing around a lot still. I still don't have any sign of why the treasury market bounced up so hard this morning. It could just be rebalancing on a Friday, you know? I think you should build a data adapter for more crypto markets. I wish that the NinjaTrader platform was open enough that you could, tap into that. But let me tell you something. For cryptocurrency markets, I think that if you're really that into it, that it would do you better to build your own platform, if that makes sense. So these APIs to connect to the cryptocurrency exchanges and even to get level 2 data are really, really simple to use. A lot of them have socket APIs. So you don't even, you just have to wait for the requests to come in through to you. Like that's how we made our cryptocurrency level 2 tape that looks at what's on Coinbase Pro, right? So, I being able to connect it in so that you could see it on the DOM. I mean, that would be really cool, but if I was going to trade a cryptocurrency market from the DOM, I would need some features that I haven't seen in any retail DOM. So there again, it's kind of like you'd probably be better off building your own thing. But really it's like the opportunities that are going to be there are going to be more high frequency trading kinds of opportunities, right? Because it's not as mature of a market. So certainly there are a lot of robots out there doing stuff and everything, but from what I've seen, they're pretty naive. So especially if you start implementing sophisticated machine learning systems and a really solid understanding of order flow and correlations, yeah, you might be able to make a really powerful cryptocurrency trading robot. But if you're going to do that, it's all going to be starting from the Coinbase API, and you're going to have to know what you're doing and do it all yourself. I don't think that like an off the shelf product will really get it done. Good boy. He stopped whining, he laid down, and I gave him a treat. Hopefully he is happy with that. How do you define an iceberg? Is there any indicator that you built for it? So I've never built an iceberg detector simply because all of the platforms already have it. So a NinjaTrader 8 order flow, if you own the full license, they have the order flow trade detector, which will detect icebergs for you and show them on the chart. And then, of course, NinjaTrader has, its ways of highlighting icebergs to you. Level 3. I think you mean level 2. Level 3 is kind of more the national bid ask for a stock. It's something it's very different from what we're talking about when we mean depth of market. Well, I wouldn't say it's very different, but people think level 3, that must be like really, really deep internals, but it's not what people expect. I remember there was this webinar, and they were like, "Oh, we're gonna share with you this secret that hardly any people know, and it will be this huge secret for you, right?" And then the secret was, "Oh, there's a thing called level 3. The level 3 is basically the national depth best bid / ask about how many contracts is available nationally for a certain stock that they use for certain things." And it was like, oh my gosh, that's it? What a freaking jip. You guys didn't give them anything useful at all. Anyways, yeah, NASDAQ website. My NASDAQ requested some changes, and I think that went through, that are kind of modernizing our markets to some extent. But like it really is kind of crazy. Well, I guess it should be expected to some extent, but really the cryptocurrency markets are more modernized than the stock market in many respects, right? Because everybody can go and get level 2 data from Coinbase. Like it's very freely available, right? And in the stock market is still very much dominated by all of these intermediary characters that are running block orders for people and things like that, which is okay. I mean, there's a certain amount of that is needed, but there's other things that I kind of feel like shouldn't be there. Like, I really don't think that dark pools are okay. I don't think that they're leading to losses for retail traders, or it's manipulating the market in some way, like a lot of people talk about. I just feel that any transaction of a security that happens in the market should be immediately reported out to everyone. I think that the market is better served by the data going to everybody, you know? That's where cryptocurrency becomes really exciting, and why I think you're seeing more central banks out there talking about making their own central bank digital currency. I think everybody thinks that it's because, oh, then they can control the money supply. Then they can make it so that, like, you can only buy so much carbon stuff. And if you've exceeded your carbon allotment for the month, then you won't be allowed to buy any more carbon producing things, for instance. Right. I think that's what people think it's going to be. But if they did that in the United States, nobody would use it. It would be a huge disaster. People would rebel against it. If there was any restrictions put on the money that aren't put on the money today, essentially. But I think the reason that they want to do it is because then they get all of this really, really detailed macroeconomic data. Right now, we have all these reports, right? In today's market, you wait for the quarterly GDP number, and then they do all of this stuff. And then usually there's like and then we get more data, and like we verify the data and everything, and then later we like revise that number, and we get what the quarterly GDP was a little bit more accurately, right? But if we had a central bank digital currency, you could look at what the quarterly GDP so far is at any instant that you want, because all you would have to do is just analyze the blockchain for all of the data. And if there's enough metadata in there to identify like what wallets are services and manufacturing and like what kind of activity it was, like the amount of insight that we're going to get into the economy would be insane. And I think that the kinds of efficiencies that we could make with the economy would be game changing. So I'm actually really excited about digital bank central currencies, but central bank digital currencies rather. But you get what I'm saying? It's like, I think that the market is improved by having more information available to more people. The downside of that is the people that are already making money won't make as much. But you know what I say? They're already making plenty, right? So let's modernize the stock market and make it more like the futures markets are. That was I kind of got off subject there, didn't I? Because you asked that, you said another thing. Anyways, to the point, I don't have anything that specifically looks for iceberg orders. The way that I always back tested iceberg orders was just like I would do it on a range chart, and if the cumulative delta or the delta for that specific bar was really high, then that signified an iceberg order, and it worked pretty well for that. And that's kind of where I learned a lot of these things that I say about order flow, where it's like, well, guys, understand order flow is like really, really useful. I really feel that a really solid, profitable system for intraday trading these days really has to include an understanding of liquidity and order flow. But a lot of the more common setups that people try to use for that are not really the edge that everybody thinks that they are. It's, if you see an iceberg and you just fade the iceberg every time, that doesn't work, right? Now, I say if you're going to take, if I wanted to sell the market right now, if I really wanted to sell, because I have some reason to think that there's going to be selling in the future here. At the moment, I don't. I'm really not sure why it moved the way that it did. But if I really thought there was a good chance that we were going to move down, and I'm seeing an iceberg on the offer, joining that offer is an edge over just randomly hitting the bidder offer, right? It's not easy to follow institutional orders as they mostly use VWAP and percentage of volume orders, so it comes with the low market impact. Well, so first of all, if they're using the VWAP or TWAP strategies, okay, so I don't think that people understand how they do this shit. Okay, let's pull up a chart here. Okay, so if I'm doing ZN, let's just do a 5-minute chart here on ZN, and we'll turn tick replay on it, and we'll only give it 1 day worth of data. Right? And we're going to come in here, and I guess we'll use the built-in one, order flow VWAP. Okay. Reset interval session. Resolution, yeah, we use tick data, trading hours. Don't put the deviation bands on. I think that should be good for what we want here. Okay, yeah. Okay, so how do you use a VWAP strategy? Well, if I'm buying, then I only want to buy it when it is below the VWAP. Okay, so you could have bought it all through here. If I'm selling, I only want to sell it when it's above the VWAP. Low, above, right? Okay, cool. What if you need to sell, let's say that you need to sell 60,000 contracts, okay? You need to sell 60,000 contracts, okay? You start when the market opens 620, okay? You're able to get off maybe 5,000. Now we are below the VWAP, right? You're only supposed to sell when it's above the VWAP. What do you do? What do you do? You have to wait until it comes back up and sell it all here? That doesn't really make sense, does it? So the reality is that it actually comes through on like a bar by bar basis. So it's like, can I do it? Will it let me do it on this one? No. I think let's see here. I have a couple of different ways of showing this, but I'm not sure. Okay, let's do it this way. Let's change the data series to a volumetric bar. Do a volumetric 1 minute bid ask, right? Okay. Oh, I don't want 1 minute. 1 minute would be way too granular. So let's do it on like a 15-minute volumetric bar. Okay. Dun, 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 dun. Okay. Then we go back to that day. So what you do is you do a bar by bar, so we can kind of see like, oh, let's change our settings here a little bit so that we can see the show as profile, I think is what I really want. Yeah. Okay. So what you really do is you say like, what is the volume weighted average price of this bar? And then you buy it when it's above it or sell when it's below it. And then if you don't get the amount that you wanted during that bar, then you can have certain rules about what you need to do to catch up, right? And that's kind of how they do it. And there can also be a time weighted average price as well as a volume weighted average price, right? So you can kind of see even with that, there's like flaws with it, right? So that's why in 1999, the Almgren Chris came along. And what they found with Almgren Chris was if we simply try to minimize our impact on the order book, which is to say, like there's only so much volume out there, liquidity available to me. And if I make a really big push, it's going to kind of put some pressure on those market makers. And eventually there will be a place where enough volume is traded in an area that like all of these market makers have these positions in this spot and they're not willing to put a lot of liquidity there anymore. Like the latent liquidity is just destroyed. And so it gets stuck in that area. And then you can kind of slowly slip orders into that area where the liquidity hole is, right? And what's the best way to minimize your impact on the order book is you've got to split your orders up, right? So in the treasury, it's usually like wait 45 minutes, right? Which, hey, guess what? Just happens to be like the amount of time that it takes for your average retail trader to like give up on a trade, right? But they found that doing it that way and not really worrying about what specific price it was at was more effective than using the VWAP and TWAP. And this was a public study that was published in basically 2000, right? Omger and Chris. And that is now the preferred way to execute orders, right? So that's why I kind of feel like that VWAP is not quite what everybody thinks it is anymore. They're relying on information that's like, 25 years old now, right? Because like seriously, think about it. Omger and Chris has been around for like 20 years now. What? Right? Retail traders don't know about it, but if you know about it, maybe you can potentially use it in your trading, right? But what is the point? Is that either way, the institutions very much do things to make it difficult for you to see what they are doing, right? So if I come in and I look at it, probably what I'm going to see is some sort of autocorrelation with the orders, right? It's the orders are going to be mostly sell or mostly buy based on what the institutions are doing that day, right? But then what happens is that the market makers account for that, and there's a lot of noise so that order flow, even if it's all going in one direction, kind of diffuses into the liquidity randomly, right? So the end result for us is that if we're trying to front run essentially a large meta order, we really do it effectively, it requires more than just the market data that's out there, right? And that's where we can use our models of what institutional positioning is and how they're going to react to certain pieces of news, and just being a really well-informed trader to be able to predict that a meta order is going to be coming, or if we already have indications of a meta order coming through, how big that meta order might be, right? So yesterday was kind of one of the edge cases that I think could end up being a really good example, that like I didn't really know that there was going to be some large sell meta order, but we had certainly been seeing it come through quite consistently for a while. And then we decided to join the action, and because we had some theories about why they might be trading that meta order. And so I had some idea about how much more volume could potentially trade with it. And then we were able to read the liquidity and see where the liquidity holes were and make decisions based around those, right? That might not always work. Maybe in the future, the retail traders become a lot more sophisticated and knowledgeable about level 2, and it might be we might have to go even deeper to be able to read liquidity and make decisions off of it, right? But you know, with VWAP, like the thing is how can you use it? Well, one potential idea. You want to back test it? Hold on a second. The dog is being really good. Good dog. Okay. I think I had a Ninja script editor. No, I guess maybe I didn't. Not over here. Okay. Yeah. Okay. Let's see if I can find it. I have like a big jumble of indicators and stuff, and some of the strategies are hard to find sometimes. Okay. VWAP crossover. Good morning, NASDAQ killer. All right. If we cross above our, let's see here, what do we have? VWAP bands. Okay. So we have what is fast? Okay. Fast, slow, blah, blah, blah. Oh, fast is 10. Okay. So if the 10-minute moving average crosses above the VWAP, then we enter short. And if it doesn't, then we enter long. I think I had a different way of doing it. But you know what? I changed it like a bunch of different times. We could, do we have over here in my order flow ones? Here's one that's a VWAP dev. Okay, this one's a really great example. Okay, so this one is if the VWAP, if we get so far away from the VWAP, then we do something, right? Let's just backtest it over like a really short time period, like a month. Or actually, let's see if I have it in my history. That way we don't have to do that. Okay, I don't have it in the history. So when last time I backtested it was before they added that feature. Order flow. VWAP deviation. Oh, does the reward and all of that matter here? Stop reward factor. Okay. So let's do it with the would you like to do the S&P 500? We'll do reward factor 1 and stop 40. Yeah. And you have to turn on tick replay. Yes. And the last 4 months, that's probably okay. This one is just testing deviation from the VWAP. No, I'm Uzi. I think that's 100% what it is. I think that the CQG connection cuts out and reinitializes, and like Ninja Trader, like sees no problem with it, and Jigsaw like freaks out about it. Risk 3 to make 4 risk first touch. Let's just do it equal risk reward, because if we do it equal risk reward, that gives us a better idea of when we look at the stats how it's performing. Does that make sense? So like, if I come in and I'm risking 4 ticks to make 1, I'm gonna win like 80% of the time, right? just by randomness. And so if I get like 85% of the time, how much edge do I really have? Right? And the bigger that it's already skewed, the less that those small percentages matter. Right? So it's kind of hard for me to really decipher how much edge really is in this. Whereas if it's equal risk reward, I can just kind of take the numbers at face value. I can say, okay, well, it wins 52% of the time. So that's the margin of error that I basically get. Is 2% of the time really enough for me to base a long-term strategy on? Probably not. 2% is probably not enough. Yucko puppy. You did a DNS flush and stuff. How often is it doing it to you, Izzy? Because I maybe get it like once a day. I'm just going to move this off screen since it's taking up the whole screen. Let's just come back here. Let's build a new one from scratch, just so that you guys can see. VWAP touch generate. Okay. Order flow VWAP my VWAP figure. My VWAP equals order flow VWAP. Okay, so what do they want? They want a lot of properties, unfortunately. Let's see, maybe there's some overloads to it. Oh, there is too. Yeah, it's just the series one. Okay, so we need the resolution. VWAP resolution dot tick. Trading hours instance dot out. I'm gonna have to figure out how to make one of those. Comma. 0. Think. Yeah, like you could do all of the network things. I don't know. I'm gonna have to do some research about it, because here's the thing that bothers me about it, Uzi, is that when it happens, I don't see anything going on in NinjaTrader. It's only in Jigsaw. By the way, are you in the Jigsaw Discord? Because you could maybe ask in there. We might start an interesting conversation about it. If you want. I guess it is. Like, what is a trading hours instances default? How do you get that? None. Okay. But how do you get the trading hours instance? So do they have an example of using it? Oh. Cool. I'll take it. Standard deviations. Okay, let's go back and try this part right here. Comma. 0, 0, 0. Semicolon. Hours, deviations. Okay. So then the strategy is going to be if cross above. Actually, how should we do this? Oh, look, it finished. Oh, wow, that gave me way more trades than I thought it would. That gave us way more trades than it should have. That is interesting. Okay, but you can kind of see, like, this is what I tend to see with order flow indicators, is that, like, the initial backtest looks good, but then when you start to do other things like you add series underneath and stuff, it doesn't work. But like, okay, over 4 months, 55%. Is there something to it? Yeah, there is. It's just what you're going to find is when we go a little bit higher, when we go a little bit deeper. Okay, but let's do this other one first before we go deeper into that one, because I most of you guys are using the Touch of the View app, right? So how should we really do this? If we really want to say that it's a touch, then really what we should say is if the bar touched it and it wasn't, well, but we could just say cross above, right? Yeah, let's say, okay, cross above. And then the close goes above my VWAP in the last bar. Okay. Okay. We're going to keep it really simple here for starters. Enter short. Enter long. Yeah, I don't think that it's anybody's soft. I think it's CQG. Yeah. But we could maybe make, knowing that it does that, they could maybe make it handle that more gracefully, right? Where are the charts? I don't really use charts, to be honest with you. I do have a screen of charts over here, actually. You know what? The other day we built this chart. Where is it? Where is it? Oh, no, I had it. There it is. I had this chart, but you can only see it. Like, we only put it there because our camera died. There's your chart. There's the S&P 500. That's what it's doing right now. We haven't opened yet. And I don't really use charts. We're using order flow more so than that. We watch the DOM. But we're backtesting something right now because it's Friday and market's being kind of weird. Oh, geez. The heater is on. Hold on. What do you mean by try splitting it up? Did I close that window? No, it's still there. Okay. Let's, that will be saved. Actually, let's just look through this a little bit deeper for a second. Okay. That's the performance of it. That's using VWAP standard deviation. Do you want to trade that? I mean, it says it's profitable over the last 4 months, but what's it going to look like in 5 years? It's a little questionable, isn't it? Right? Also, when you look at like some of the MAEs, oh man, a lot of these winners actually have it go against you really far. There's also a lot of these where it goes pretty far in its favor and they go against it. Well, maybe our stops and targets are too wide for what we're trying to do there. But I'm really surprised that it took that many trades. So we might need to go in and do some things, but I digress. Oh, you know what else we need to do? Here. Add indicator, I think it is. My VWAP. Also, let's turn debug mode off because these are really expensive operations. Oops, I got it wrong. Oh, add chart indicator. There we go. Okay. So let's change this down to the one that we just made. Order flow. VWAP touch. So this is going to be like really, really naive about it, right? Every time that it touches the VWAP, it's gonna try and oh, you know what? We need to add like stops and targets to this sort of a thing, huh? I think so. Don't you think that that would be smart? VWAP is well known for a reason because it's a great way to herd in the sheep. Well, I think it's a little bit more than that. Like, okay, hold on a second. I need to make a couple of other changes here. It's a good comment. And we want to pull from over here also these properties. Like we kind of already covered it, but a lot of institutions used to use VWAP. It's not considered the optimal thing anymore, but it's not considered the optimal thing anymore, but a lot of institutions used it, and guys back in the early 2000s knew about it, and took advantage of it, and that's why I think it becomes so popular and well known today. Yeah, I think today could be a tricky day. So I'm going to be paying really close attention today to what the S&P 500 does, because if yesterday was just like speculation and stuff, then you might see a lot of those orders close going into the weekend, right, and take profits. But if like the S&P 500 like pukes today and goes lower, I'm a little bit more concerned. It's probably options activity that's driving that sort of a thing, but you get what I mean. Yesterday was a little odd. When you come into it, look at the. Sorry, I'm a little disorganized today. I'm not feeling the best. Okay. When you go and you read the internet discussion around yesterday's action, the investors are a little concerned by what they saw yesterday. A lot of people are like, why was the market down? Blaming it on Powell, things like that. Like yesterday's action caught a lot of people's attention, right? And for that reason, I think that how they trade it today matters. It's an expiration date. Well, it's a weekly expiration. Remember that last week we had an early options expiration this month. Wait, did I just run it? Oh, that's weird. All data must be loaded in the hosting Ninja script in its configure state. Oh, really? Oh, really? It's never given me that message before, because usually you want to do these things over here. But I guess it's saying that because you're loading a data series that you should do it in configure. So we will add it up here in configure. That looks a little bit better. Yes. No, we got like weekly options expirations, but remember that last week was the monthly options expiration. So, and then when's the May one? It's still quite a ways off, right? Because then you got 6, 7, 13. It's not till the 20th. And you got a lot of crazy things to happen between then, because you got on the 4th is the FOMC meeting. And then I think over here on the 10th and 11th is when we get the inflation data. Yeah, well, so another thing is I haven't seen anybody saying anything about like the amount of gamma that's expiring and everything. So I haven't seen anything to indicate to me that this month is a particularly important options expiration. Initial move on the open looks like it was down. There was a little bit of volume on it too. That's curious to me. Let's move this out of the way again. Actually, let's just kind of come through, take a look of the markets. The dollar's still kind of chopping around in the higher end of its range. Bitcoin going sideways. Gold's still down. Japanese yen still down. So the Japanese yen did not follow the S&P 500. So this move in the treasuries was really isolated to the treasuries, which is very, very interesting. And what about what's like the most active things? It looks like they're really active in the 30-year. Silver is pretty active today. Okay. Encoding overloaded. I'm sorry if the stream is choppy today. It's because we're doing the back test. It's because we're doing the back test. So while that's loading, how do we want to do this? How do we want to kind of... So one thing that I think that we need to do is that like there should be a filter. Like if it crosses, then we shouldn't be taking any other crosses for a while. Yeah. So how about we add something here while it's backtesting? What if we say and not crossover above in the last 30 minutes. So we'll only do it the first time that it crosses. Yeah. And not cross below. How much round do you have? I am running I don't remember. I had a little bit extra like you did. Come over here. Yeah. It is using some processor to do this all, and some memory. Oh, that's right. I have 32 gigs. So it's using about 50% of it to do this. Okay. Testing order flow indicators is expensive on the resources, right? You can just see how we started the back test. It's churning. It's churning. And it is probably affecting the stream. So if the stream is like buffering for you, I'm sorry. Maybe we shouldn't be doing this. But it's Friday. I don't know if I really want to take a trade here after the way that the Treasury's been acting. I find it really bizarre, that spike. It seems like it was mostly on the open. Huge spike, comes all the way back. No real explanation for any of it. I'm not really seeing, well, it does look like when they spiked that some of the spreads steepened, but then they kind of flattened back out. So E-mini is getting furious there. Here, let's minimize this. Wow. That seems a tad aggressive to me. Well, let's come back over here to volume profile. Weekly low is below the 60s, so they might want to test that. So let's try to relax and chill out for a little bit. I might take a sim trade here in the MES. We'll see. Man, that back test is taking a long time for even 4 months. For even 4 months, it's taking a long time. Maybe I should have changed it and only done 1 month. Yeah. Oh, you know why? Because that VWAP is using a 1 tick resolution. So it's adding a 1 tick data series underneath. That's why. So it might take it it might take it like 30 minutes. That S&P 500 is almost making me seasick. Somebody bought it up in there. It's a little bit too early to tell, but they're definitely seeing some curious behaviors, I guess we could say. I think the dog fell asleep. Couldn't get him to, sitting on my desk for too long. It wasn't working. I don't know. The problem is I would really like to have the camera in a way that like you could see him, but because you can like really only see my face, I don't know what the best way to do it would be. Negative delta. Well, do you see that? Do you see that spike there? It's like, okay, on the open, there was a spike down, but then through here, really big spike by, and then almost immediately spiked back down. And with the action being as quick as it is in the ES, the like swings like that are really significant. So that kind of makes it difficult for us if we're trying to predict like meta orders in the S&P 500, because maybe some people are stepping in and buying here. Though I think that there's those downside targets that there's a really good chance that they're going to try and test those. But we'll see. They might pull it out here. They might pull it out here. S&P 500 is hard to read in that respect, right? There's just a lot of noise. A lot of noise. Yeah, there they're going. 0.8 easily, I might add. Ah, here it is. Hmm. Now that's interesting. So on this one, back test, we got 73% profitable over the last 4 months, but it lost in net. Probably because once you cross above it, it's going to cross below it again and take profit or whatever the deal is. And that's where those are resulting from, probably. So if we come in here to the executions, right? It was exactly the problem that we were expecting. Not executions, trades. Okay. Then we can see close position, right? Yeah, the vast majority of them are closing the position and not waiting for the trade to play out. Okay. So I'm thinking number one is we're not going to care about the cross the other way unless it's been 30 minutes to filter out a lot of trades. But I also think we should change it. Oh geez, where did I just put my there we go. I think that we should also come in here to our VWAP touch and we should say if position dot market position equals market position dot flat and so if we're already in a trade, it will wait until we've got the thing, right? If we're in a position, it will stay in that position until it hits the stop or the target. Okay. That way we should get like more equal risk reward here. Okay. And it's going to filter out a couple of these because we're going to say we won't do it if it was, if it crosses above it. Where's my pen pencil? We've got VWAP like this, and here's price, and it goes jeep, 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 jeep. It's only going to take this one. It's only going to take this one. And these ones will be ignored because the VWAP was crossed too recently. Okay. And I think the amount of time that took was about maybe 10, 15 minutes. So I'm okay with that. Nice stop on. Well, they definitely fell through there, didn't they? Although you can kind of see how after they broke it, it started to chop around a bit. So there does appear to be some latent liquidity in this location. We'll run that again. It's kind of a question. There's a lot of price action type of people that say now that it's done that you should buy it, but I'm a little skeptical, especially since like this is aggressive action off of the open. Like they're going for it, right? Not so sure hero trade really makes sense. There's a big order there at 43.50. Let's see how quickly they fill him. Oh, you know what? I would come in here. Okay, they went through it. My data feed on ES might be delayed there. Oh, maybe because of the backtest. Maybe the backtest is loading data at the moment. I should probably make sure I have that box checked. This is only use local data. I'm going to put like a stop above that just in case that big order kind of flips them around there. Okay, there you go. Catching up. Now the change in delta is very, very extreme. Well, let's go for 10 here. Treasury's kind of moving up there. What do you think about that, guys? Interesting. I'm going to cancel that take profit order. I'm going to add another one if they give it to me. And I'll take it off there. The treasuries are moving up pretty hard there. Looks like this is bringing some fear into the market. The whole scenario I was drawing out about like where we move today is probably really important to market sentiment. I think, it's going to matter how they close the day out. Like in this kind of situation, the first part of the market action could be a head fake. Like this is either head fake or like this turns really ugly really fast, right? Almost. There we go. So I wanted to do that because I kind of noticed that once you get to this 62, that might be a place where momentum turns around. So I don't necessarily want to be taking it off at that point, but I don't know why I'm picking that spot. It's kind of, well, I mean, I guess it is based a little bit on my reading of the liquidity, but I don't know if that's really something very reliable. This is really me trying to play around with feel on the S&P 500. If I make money off of this, it's a sim trade. Wouldn't read too much into it. Oh, I forgot about the manufacturing PMIs. Do I not have the new squawk going here? Oh, I did not. They're not giving me the number over here either. What's with that? Okay, it looks like manufacturing PMI was better than expected, but services was worse than expected. Not slightly, it was actually like by 4 points. Did I not? I don't think it right there. House Republicans demand Twitter board preserve all records related to Musk buyout bid. What, Tesla car crashes through front doors of marijuana dispensary on 420. Are you kidding me? Just checking, make sure we didn't miss any significant headlines, but it doesn't look like we did. So The Hill says Biden faces mutiny over Title 42. Okay. Treasury kind of ending a spike. I think they were going to need to like, yeah, change. Actually, let's clear all of it. Clear the current trades there. Since this is going to be trading back and forth a lot. Stocks have weathered surging bond yields, but can't take too much more. This Morgan Stanley strategist warns. Oh, there's our results. That's not what we want to see. Those changes did not result in any trades. So did I make a mistake in my code there? Market position is flat and we're crossing above the VWAP. And oh no, that's never going to work. No, that's never going to work. Because if this is true, this is going to be true too because it happened in the last 1 minute. Right? There's a way to do this. Hold on a second. I never got filled on that second order, but it's looking okay. I think what I'm going to have to do is I'm going to have to do like a trigger, right? Oh, actually, let's not make it a bool. Int last trade. And current bar minus last cross is greater than 20. Like that. Let's try that. I'm kind of the kind of programmer that's like, try something, compile it, I go through that a lot, which is not really very optimal when you're trying to backtest. So I think that what we should do is we should just reduce the time frame that we're trying to test. Oops. Lowercase l. And change it to be just this week. Going back to here. So what was I thinking about before I was reading all this? Oh, yeah. Stocks have weathered surging bond yields, but can't take too much more, this Morgan Stanley strategist warns. Oh, right. President Biden, the bipartisan infrastructure bill, which I might add, I wrote the original one with my own paw. I wrote it, sat down and wrote it because I was convinced there was no other answer than to begin to invest in our country again. That bill is like thousands of pages. Okay, so that was a much faster back test. I'm not going to pay attention to any of these stats. What I'm going to do is I'm going to come into the chart and just confirm that it's doing what we want it to do. Okay. So for instance, right here, we had a cross. Okay, yes, it came back. And so we tried to buy it. Very good. Then it took a stop loss 10 points lower. Correct. Okay. Now our what do we say? Okay, so this one, it did it a bunch of times, didn't it? Now that right there seems like wrong, huh? Oh, no. That's it. Yeah, it's been a while since it came back, and then it's going to take it short and wants it to come down here. So the target might be too far away. Actually, the indications that we're getting right now is very much that it might be too far away, but it does look like it is trading it correctly. So let's just bring the stop in to be like half of that. Let's say 20. And now let's go back and tell it to backtest back to the beginning of the year. Also, let's right click on the thing here in properties, and there is a no, not that. Yes, properties. Use local data only. Okay. Run. Okay, so it's already given it to me, huh? All right, so Treasuries back up to their highs again. Can you believe that? You know, I haven't been like hyper engaged on it or anything, but I think I would have a very hard time trading this in the ES or in the ZN. Blah. You see how off I am today? It's a good reason that I'm not trading, but that is like really wild action in the treasury there on for no news and everything. Well, I mean, we did have PMIs. Do we think that they're moving because of the PMIs? It might actually be possible. Might actually be possible. They might be a little concerned about those services numbers. Oh man. Okay, yeah. Something really interesting happening in politics right now. Pay attention to this, okay? Because this might seem like something really pedantic, but it could end up being really significant in the long run. So, after Disney pushed really hard against that bill that they wanted to have in Florida to prevent the grooming of children, And Disney pushed back very hard against it, saying that actually they're just trying to marginalize children that have already been marginalized because they're gay or whatever the deal is, which I'm kind of like, they're 10 years old. Are you kidding me? Anyways, that's the argument, right? So the Florida legislature decided to get rid of Disney's like favored tax status in terms of, like Disney provides all its own services and amenities and everything. So it's going to go back to the two counties, I guess, that Disney World is a part of. And a lot of people are warning that it's going to be a huge burden on those counties and that it's going to result in like a debt crisis and all sorts of crazy stuff. Okay. And the thing is that the Florida legislature pushed this bill through very, very quickly. So that's always like a really big red flag to me. Is like it seems to me that this change is being mostly like they're playing politics and it's ideologically driven, right? And they didn't do enough research about the very complicated impacts this decision will have on the economy of Florida. And so if this ends up being a really bad decision, it could very significantly harm the governor there, who is a top leading candidate for the Republican nomination next time around. So that's why it matters. Yeah. So I don't know enough about the issue to know how it's going to turn out, but I just know enough that we're going to want to pay attention and see what happens. Right? Okay, so that other contract looking pretty good. Pretty good. Will the S&P 500 dig its way out of the hole that they're in here? Uh-oh, the Onion. Man unsure why he doesn't feel like crap today? What? We didn't have to read this one. Aubrey says, Banks just puking today. Well, that didn't surprise me because Banks have actually done pretty good this week. Okay. Expressing his confusion about the unexpected change in outlook, local man Grant Pierce was reportedly unsure Thursday why he wasn't feeling like total crap. It's so darn strange. I woke up this morning and for some reason I was struck with the possibility that life might actually be worth living, said a nonplussed Pierce, adding that he hadn't made any lifestyle changes or received any news that would explain his burgeoning sense that he was not trapped in an unceasing hell from which he could never escape. It's not even like I got a full night's sleep or started eating healthier or anything, but in this moment I'm suffused with this calm that things might kind of be okay eventually. I even cracked a smile while I was making my breakfast this morning. I don't know what the heck is wrong with me. At press time, a relieved Pierce told reporters that the familiar sensation of abject misery had returned in full force. I get it. It's funny because everybody is really pessimistic right now. Well, them treasuries looking pretty good and coming back up to 119 even. I don't know. So when I come in today, I saw a lot of things that kind of seemed sentiment negative in the treasuries, right? So I was a little surprised to see so much buying. I'm really suspicious that this is like weekend rebalancing rather, right? Because I've kind of been looking at this and thinking like, some of these market expectations seem like they're getting a little extreme. Like, I think it was Jack that asked me in Discord, like, do you think that they can get to 4%? And I was like, well, which one do you think can get to 4%? Because the 10-year could definitely get to 10%, right? But the amount of time that it would take to get to 4% in the federal funds rate, I think that by the time you're looking at 4% in the federal funds rate, you're facing a recession. You know what I mean? So I'm not sure that they can get there. And at the moment, it's kind of, oh, there you go. finish this and then let me finish this out and then I'll show you the results of the test. So I think that in the next week or two, at least up until the next Federal Reserve meeting, may be a time period where we could see a little bit of a recovery in the treasuries. And seeing that today kind of makes me think maybe I'm on the right track with that. The reason why trading is difficult is because everyone's stupid. I don't think that that's the case. I think that the market is very good at lying to you. Okay, so here we go. So let's just come in here. Okay, so it took 290 trades, which is about 3 per day. So that's pretty good. Our average winning trade is equal to our average losing trade. And so what we get on win rate should be, you know, around 50%, 45 to 50%. And what are we getting? We're getting 47%. So what does that tell you? First touch of the VWAP, at least with the risk parameters that we're using, not an edge. Not an edge. And why is that? Well, I think that this action explains it really, really well. Right? When you get to a price level that matters, right? That's significant, it actually tends to chop around that price level a lot. So you have days like yesterday where the price movement across it is like really, really random, right? And then you get these moments where like, it goes below the VWAP and like it never even matters, right? So I have found that if you try and take the cross of the VWAP, like on this one, if we said, okay, just sell it, that would have been a winner, right? And you can make more on those than you can the other way on the VWAP touch. Okay, so there's only 4 months of data, but I don't know if the people that kind of started this conversation are still there, but do you see why I say that like the VWAP is not this silver bullet that people treat it? Right? There's like some real problems with the VWAP as a strategy, that just the pure cross of the VWAP as a strategy. It is random, essentially. Now we can come in here. Let's look at some of the deeper analysis just for fun. Well, okay, so you can see how there are some that like really go, and in fact, there are even some that give us a larger winner than we should be getting because of the bar resolution, probably. And there's a bunch that never really go in our favor, right? Most of the ones that are losers. Oh, actually, it looks like most of the ones that are, you can't really see the ones that never have favorable excursion because they're all the way over here. But MAE. Okay, so even when you look at the favorable and adverse excursion, doesn't really suggest any kind of an edge in here, right? Like if you come back over to here, okay, average MAE and average MFE is just 20. So it's just random, is what it's saying, right? It's just random. Analysis, total efficiency. I mean, that's not too bad. I've seen worse at least. So like VWAP is a really good spot to kind of like, if you want to pace yourself, get a certain number of trades a day, playing the VWAP totally seems like a great idea, right? But it's random. Over the 4-month period that we traded, it's random. Look at the cumulative net profit. It's kind of random, guys. Looks like it's mostly based on how trendy the market is, actually. Now maybe we could try building a more complicated system. Like maybe we could come in and we could say, if we're getting a lot of trend, the R2 is really high, and we're getting across of the VWAP, then okay. So let me try and do an example of a VWAP strategy that I think might be more likely to work, okay? So I'm going to add r squared my r2. And then we're going to come in here and say my r2 equals r squared of 50. Okay. And then I'm going to say, I'm just going to comment all of this old stuff out and just say unprofitable. Okay. And then I'm going to say if cross above close my view out and r squared of 0 is greater than 0.8. Now let's make that optimizable. It's greater than threshold. I'm going to do the opposite. I'm going to enter long. I'm going to enter long against. I'm going to trade against it. I'm going to trade it going through. Okay. Oh, what am I doing? Public double threshold. Get set. Ba-ba-da. Okay. Oops, what did I do there? I accidentally pushed the page down. Enter. This one is going to be enter short cross below. Now, the problem with this that we're going to get is that it's not going to be above that threshold very often. Okay. So got to be careful about that. It's not going to take very many trades. Okay. The next thing is that I think I want a reward factor of 2. I'm going to keep my stop to be relatively low. 20, reward factor 2, enter short. Yes. And I can do, I think I can do stop and reverse because you're very unlikely to stop and reverse on this actually. Okay. Do you take out news dates? Do you take, nope. Well, it's really hard and without building a lot of stuff. I would need to have a data source that would give me news. I don't have a data. I mean, I get the news through Financial Juice, but I don't have one that, I can do it through an API, right? Oh, my R2, not R squared. But see, I think that there's a really big fallacy in that, right? Okay. So yes, you could test it when you say, don't trade it when there's news, right? How often does that happen? You take out every instance where it's news. Are the results that you're getting really useful? And what reason do we have to believe that it actually will be different to justify the amount of work that doing that would necessitate? Right? Whereas what we know is just that just the pure technicals of it, it's actually quite random what it's going to do around that price level. And this is always the problem with price levels, guys, is that markets are very statistically efficient. So if a price level actually does matter, the end result is typically that it becomes more random around that area, not less. Even VWAP. But let's do something where we can. But then the other issue with the VWAP is it's kind of like it's a mean reverting strategy, or like the first touch of the VWAP is a mean reverting strategy essentially, right? And there's kind of problems with that too because there's a lot of noise in the market. So you have to how do you filter it out? Well, we can use R2, right? We could if this one doesn't work, we could try going back, doing it the other way and say only try and trade against the VWAP if there's not a lot of autocorrelation in the market, right? But that's going to result in very, very few trades too. What about leaning on ZF, NZB, MBOs? There is way more to it. So I'm not exactly sure what you're meaning, but let me try and approach it this way. Okay. In order to have a successful strategy, that strategy has to successfully predict future orders. So what reason do we have to believe that the current resting bids and offers on the DOM are super effective at predicting what the future orders are going to be? Wouldn't those guys be taking into account everything that they can possibly already know about what the future orders are going to be, right? So really, if you're going to predict future orders successfully, then really what you're going to have to do is you're going to have to be able to use information that is not actually priced into the market, right? You have to know something, and it could be something that is market data, right? But you're going to have to use that, and it's going to have to be something that the market's not pricing in, right? So do you think that those market making robots are very good at pricing in those sorts of things? They are, right? What are they not good at? They're not good at pricing in, current news, market sentiment, these sorts of things, right? Things that humans are good at, but machine learning algorithms so far are not, right? So that's why, like, a successful intraday trading strategy is probably going to have to incorporate multiple things, right? It's going to have to incorporate a knowledge of the liquidity. It's probably going to have to incorporate market sentiment. It's probably going to have to incorporate models that try and determine what the market, the institutional positioning is based on options and their strategies and the day of the month it is and seasonality, etc., etc., etc. It's probably going to have to account for the news, right? So when I'm coming in and I'm trying to do a technical analysis strategy that's based primarily on price and volume, and VWAP is still price and volume, kind of, right? Is that going to be enough? With what we know, it's probably not going to be enough, right? And what did we just show right there? What we showed right there is that trying to find a statistical aberration in the behavior of price around the VWAP is really hard. And what were we doing? This is what the next step of this is going to be, and where I'm kind of trying to lead you down is like, okay, if we just trade the VWAP, right, it looks random. So then what is the response that you guys are always going to come up with? Well, it only matters in this situation, in this situation. Okay, but you're talking about something that only gives you 3 signals a day already. So now if this next test is probably going to be significantly less trades. It's probably going to be less than 1 trade a day, right? So then the issue that you're going to have is it really trigger enough for it to really be worth like even trading and following? And is it going to be enough for you to actually pull a statistically significant result out of it from your back testing to begin with, right? Because if this thing comes out and in 4 months it only took like 20 trades, can you really trade that? Can you really trust those back test results? It needs to be at least 30 to 50 in a normal distribution. And our order flow is probably not going to be that case. We'll probably need like a 1,000 trades to even say that we even learned anything, right? You see the problem? Like, when we're taking it from a quantitative perspective, like, we have a lot of tools and ideas about how to use the markets and how to run tests. But the reality is that most of the time when it comes to order flow, we retail traders don't have the ability to really truly test it quantitatively. We would need 5 years of like full order flow data, which we cannot get. Right? That we cannot get. So it's just setup that comes and goes. Wait, well, like maybe that's the case, but how do we prove that? We can't. I can't prove that. We literally do not have the data to do it. Don tells you explicitly what's going. I don't think that's the case. If that's the case, then let's prove that. Let's write a robot that uses the level 2, and we'll let the robot trade. Well, you say that you can, but we can't really prove what you're doing, right? That's anecdotal. I wish that was enough, right? Like here's the thing. Yeah, you buy a combine and make it. That's good, but it does not. I can't go to the Journal of Financial Markets and say, hey, NASDAQ killer made money this month and we wrote a study about it and expect to get published, right? That's so when I say let's prove it, that's what I mean. Is like if we can prove it, then we should be able to write a journal article that if I was actually good at writing journal articles like that, I have no experience in doing it. So that's a problem to begin with. But maybe we somehow convinced Jean-Philippe to help us to write the article, all right? Do we have something that would even be worth publishing in there, right? Well, one person's performance is what? It's anecdotal experience. So that's not enough. That's not enough. But if you can do it, then maybe what we can do is we can say maybe what he does is automatable. So then we could automate it, and then, we would have to run it for a really long time. But then if we ran it for a really long time, then maybe we could write a journal article about it. Although at that point, probably you don't want to write a journal article about it. You just want to keep making money on it, right? But for your own trading, when you're thinking about saying something, and especially when you're thinking about saying something to other people, to the public, that's what I think the standard should be. Is that if I can't really prove it to you through a reasonable backtest or something that I could like publish in a journal, then I can't really say that it's a thing, right? So that's why the discussion around VWAP kind of turns into what it is, right? Because we know there's history. I can prove to you the history of it, right? Because you can go and read the Almgren Crest paper, and they talk about how the VWAP and TWAP are strategies that have been used popularly in the past. And then they explain their algorithm, and then they compare their algorithm to the performance of VWAP and TWAP, and they show how their algorithm it has better execution, right? Oh, why did I buy it and let it sit there? Because I don't know. It looks like that move lower was kind of countered the setup, so probably should take it off, huh? Is it me, or is the ES order flow weight that it's across the markets, dude? I mean, I can't. The ES depth is a little bit harder to read per se, and kind of like give you stats on, because it changes a lot, and whether it's active market hours or not matters too. But in the treasuries, we're only putting up 1,000 lots per price, and normally we're like 3 to 4. So yeah, the markets are way thinner than they were before. Okay, so we got a where did it go? Oh, is it over here? It's still over here. I guess I just minimized it. Da-da-da-da! Look, my strategy worked. So it only wins 33% of the time, but because I have a 2-to-1 risk-reward ratio, it works really, really well. That's actually, okay, so the Sharpe ratio is 0.62. Ooh. Okay, but how many trades did it take? Oh, it took 1,148 trades? In 4 months? That can't be right. Okay, so now we need to go to the chart and look at it. What is it doing? Yes, I see. Okay, so it is. So what's happening here is that the R2 actually is pretty good through here, and so that's why it takes so many trades. And then it gets to the profit target. Okay, so I think we have some issues here, don't we? Yeah, because most of these are not taking them, right? I think that we probably need to implement some of the other filters that we had before. Actually, that whole thing is still really curious though, because that actually suggests that if we filter those out correctly, that we might actually be able to do even better. But let's see here. Okay, so let's just come back to our script here. I don't think I want to do it just like if the market position is flat, but we can add this filter, right? We'll uncomment this stuff right here, and we'll add this filter. And current bar minus last cross is greater than 20. Okay, so I'll only do the first one, right? This may ruin the strategy, but it might make it a lot better. Should make our win rate better, because the 33 is pretty, even for a 2-to-1. I would much rather see that in like the 40% range. And we should be able to get this last one out, and then it'll probably be time for things to finish. But so do you kind of see like where this is going? It's like, okay, well, how did I do that? I know that auto correlation is the thing, and I'm taking advantage of that instead. Is really how I'm doing that, right? But we only have 4 months. Probably we go back a year, then maybe it doesn't work as well. So let's try and run that back test and see what stats we get off of that first before we get too excited about it, right? Well, these treasures, I mean, when they pushed back up to the highs and broke the highs again, that was like really impressive. The amount that they've extended since then is really impressive. And the volume has been long this whole time. So I don't have anything that says to me that we could get more. We're like a net 20,000 contracts, and I don't know how big today will be. But if we were feeling better, we were more engaged in stuff, could we have tried buying it before they had broken out? Maybe we could have tried doing it before breaking out, right? Yeah, I want to scientifically measure my theory, but I don't want to. Yeah. Well, you can share with me though, and I can help you test it. And all we'll say is, yeah, NASDAQ killer's strategy does work, right? I don't think the algos can price you out when the moves are too big. That might be the case. Especially if we keep it small. It really depends on how many ticks you're taking though, right? So one of the big problems that I see, like seriously, and I mean even Jigsaw is making this mistake. They were saying, oh, they had an article on the Jigsaw blog yesterday. They said, oh yeah, here's this guy. He's trading really well. And everybody's telling him that there's a problem with his strategy because he has a really far away stop. But he is managing his position with the market. And most of the time he gets out before that stop gets hit. But when I go and I look at the stats of the strategy, it's like he's trading oil and he's like taking 3 ticks. He's got like a 20 tick stop, but his average loser is twice his average winner, right? It's like 3 ticks. That's like, you can't size that up very large, can you? You really can't. That's a tiny, on oil especially. That's tiny. And the thing is there's so much noise in oil. That sounds like noise trading to me. And the other problem with it, the big problem I had with what they presented in that was that this guy had a losing streak of 16. So a win rate of 80%, but you had a losing streak of 16 in a row? How? What? You realize how astronomically low of a probability that is to just happen randomly? 16 losers in a row with an 80% win. Listen, when I win maybe 45% of the time, for me to have a loss of 16 is actually quite likely to happen to you at least once a year. But 80%, that's like the numbers are like in the quintillions or something. It's nuts. Yeah. That's a little questionable of a strategy, don't you think? But it was just, I find it so frustrating. Like, I keep seeing everybody making the same mistakes. Yeah. And even people that I thought would know better make these mistakes. I understand why Nassim Taleb is the way that he is, because he knows this really, really advanced math that very, very few people in the world understand. And then everybody that doesn't understand this math turns around and tries to tell him that he's wrong when he knows the exact fallacies in the math they're using that they're making, right? He comes in and he's saying, well, you're using a standard deviation and squares, average squares is not a very good way of determining. The more fat-tailed your distribution is, the more off your standard deviation based on the least squares method is going to be. Same with regression. And he knows this. He can prove it to you with the math, and yet he goes around and he looks at everybody. He's like, look, here's the stuff that I found based off of standard deviation. Wow. And then they don't want to believe him. Granted, he might try and dive into social issues where it's more than just the math. Like you might be right on the math, but you're going to be wrong on like what is actually possible to get people to do. That's a mistake I think he was making with his campaign for COVID, because he was basically saying like, look, the fat-tailedness of a pandemic is like huge, and so you really do have to take it seriously, because even if this isn't the big one, when the big one happens, it's going to end society, right? Probably right about that. But what are policies that actually help us avoid that? It's a very different question, isn't it? Right? So I'm sitting here. I feel like I'm doing the best job that I can. I feel like we've done really, really well with the YouTube channel. The stream hasn't been as popular this week, but we go through oscillations like that. People are gonna get more interested in what we have to say as the Federal Reserve meeting gets closer, right? But I try and make these videos about this. I leave a lot of comments on Reddit and Futures.io about this sort of stuff, and like it's still every day same problems. What do you do about it? Seems to me like it's a pointless venture. All I can do is, the 11 of you that are watching, I can make sure that you understand that, because that's going to give you so much better of a chance at being successful, right? Okay, let's look at our results. And then, actually that was a lot faster than I thought. Oh, that killed it. Took a lot less trades though. Took a lot less trades. Oh, wait. Did I not? Oh, I don't have the reward factor correct. Okay, but let's just come back and look at the chart and see that it's kind of trying to do what we wanted it to. Anyways. Okay, so in that instance, I wanted to sell it short. And it took the stop loss. So let's do this. 40 and 2. I don't know what changed, but the last one, it was giving me 2-to-1 risk reward, right? Which is what we want. We want to catch runners. So I'm looking at the S&P 500. That kind of messing around that I was doing in the ES, worked out okay because I just scratched it, right? But it's only showing me we only need today. There we go. Yeah, there's the one. I got, it doesn't tell me the MFE and MAE anymore. That sucks. Well, but I basically was able to scratch it, so that's cool. I don't know if it makes sense to do it anymore. Like, we could try and short it, but I don't have anything to tell me that it's going to keep going. The treasury's up big today, though. Here's the funny thing. Markets seem to be concerned about interest rates. Well, guess what? Interest rates just dropped a little bit. Don't care today, huh? All right. Well. No, I don't know why I have that open. Let's close that. Let's close that. Still does more of this stuff about House Republicans press Twitter board to preserve all record of Elon Musk's offers to buy the company. I really gotta wonder what's going through the heads of the Twitter board right now. The yen made me do it. What's really curious? Well, okay, this more recent rise that we've had today was correlated. But the rise that we had immediately on the open was not at all. It was just, it only happened at the treasury, and it was really kind of like for no reason at all. So it really kind of makes you wonder what was causing that action. Was it like they knew that there was a really strong possibility that the treasuries were going to buy today, and so that's why they were buying it up, and then they kind of like overdid it? Jane Street Capital, I've never heard of them before. Doesn't it have anything to do with the spreads? Does it though? I don't know, because I haven't been able to go. So Follow the FX was showing me a bunch of stuff about spreads. But the big problem that I have with spreads, like, here's the part that I haven't been able to tell you, is that I have never gone through in the NinjaTrader strategy window and tried to do a strategy where you're trading two things, right? I don't know if that really works or not. So I've never back tested spread trading strategies, and that's why part of why I've never gone into like, well, okay, is there like a certain probability of them mean reverting in this situation, or if this spread is leading, that this spread is going to catch up or something like that? I don't have any stats of that sort. We could export some data into Python and we could try and get some more sophisticated statistics out of it, like how auto correlated they are and things like that, or sorry, how co-integrated they are, right? but I can't backtest it. So I only utilize the spread to understand how much of the order flow is the spread so that I can discount it in my read of the DOM. But one of the problems that you'll get is how much a lot of the time the change in the spread is very, very tiny. So you have to put a lot of contracts on to really make a significant amount of money from it. And you're paying a lot in fees because of that as a result, right? So that's the problem with that. Makes a lot if you're like a big institution though, where your transaction costs are very small, then it very quickly starts to make a lot more sense, right? From our perspective, the way that I would do the spreads is you can come in here in the micros and you can try and trade the spread, right? So if you think it's going to flatten or if you think it's going to steepen, and you can keep those trades on for weeks and weeks and weeks and still have relatively low risk on, right? So that's where spreads can be useful is you can hold them for a long time. And often where the spread is going to go are things that you can predict months in advance. Not today. I think right now I'm a little unsure about what the spreads are going to do between now and the next FOMC meeting. Seems like there's kind of a little bit of a fight going on between the flattening and the steepening, isn't there? But a couple of months ago, you probably could have just gone flat. Would have been a good trade. No matter how hard they try and hide their errors, you can never flat the rules of the book. It doesn't. What I think you're trying to do is you're trying to build like an ideology, right? You know what I'm saying? Like you're thinking, okay, like if I can come up with the right ideological mantras to follow, and then I can make all of my decisions based off of that. But really, the way that you've got to approach it is, here are the circumstances. Can I prove that statistically that there's an aberration around that? No. Then move on. And the best information that we have is the stuff from these research studies from the academic community that even Wall Street look at and read that prove certain behaviors in the order book, right? Those are inescapable, right? Liquidity holes happen. And the way that the markets react around them are very, very consistent. Now, their study did not prove that you can utilize those particular phenomenons in a trading strategy like X and make money from it. But it is a start. All right, so now that's a little bit better. Okay, at least on that first one it took it. So let's look at the summary. Hey, it's not bad. It's interesting to me that, well, I guess since the beginning of the year, the S&P 500 has kind of been a tough trade. It's really, really interesting to me there that the short trades are working out so much better than the long trades. Look at the difference. Well, oh, you know why? It's because, actually, the number of trades that it takes isn't too bad. An average of 3 trades per day. Our risk reward ratio is pretty good. Dude, if we can add another filter on top of this that is really effective at telling us on the higher time frame whether to go long or short, this might be something worth trading. It's only 4 months worth of data, but I could go back and I could do at least 2 years and I could see this might be one of the better strategies that we've done. I hear Jane Street Capital is where Sam Bankman-Fried learned all of his trading. They're a quantitative trading firm and liquidity provider with the focus on technology and collaborative problem. Well, so they're probably doing high frequency trading kind of stuff. But how did Sam make his money? He's the founder of a cryptocurrency exchange. That doesn't necessarily, and he's only 30 years old too. That doesn't necessarily give me a whole lot of confidence in that you could trade his trading strategy and make money, right? Mm-hmm. Oh, he was doing arbitrage early on. So there's something. I mean, following him might help you trade in the cryptocurrency market, but you don't get many of those opportunities in traditional markets, right? So I really don't like that. Let's just come in deeper into the analysis here. Oh, that's very, very interesting. What happened on the 2nd of March? Starting from there. So when it started working. Well, I would need to filter it out between long and short trades to see, even if I was only doing short trades, when did it start like working well and stuff? That's really curious though. The drawdown is like really ugly, right? There's one day that was really bad. Looks like there's a couple of winners that go quite a far away, so there is a lot of randomness involved here with having the wide stop and everything. There's a lot of these that are doing pretty well, but we don't take. There's a lot of exit inefficiency here. So we might want to implement some profit protection strategies as well. Seems like this might be something that we could base a strategy on. Actually, so this, the point that I was trying to make earlier, it kind of actually didn't prove my point, did it? Because the point that I was trying to prove to you guys was that once you start filtering things down, then you get too few trades. Well, with this one, getting 3 trades a day is okay. Like we have room to maybe implement a daily filter, right? Yeah, it'd be tough. Okay. But seems like there's maybe something to it. We might be able to come in and just kind of really tighten things up. It might work better. But those short trades, that tells you something, right? That's telling you that if you know what direction the market is going to go, that's a really effective way to trade. Wait for there to be some degree of autocorrelation in the market, and then if it crosses the VWAP with that high degree of autocorrelation, run with it. But you have to have a pretty good idea of what like the overall trend in the market is. So there's still a problem, but that's a solvable problem potentially, right? Because we could do things like we could say use the 50-day moving average and only go short below the 50-day moving average and only go long above the 50-day moving average, for instance, right? And then if we implement some profit protection strategies too, that might help. I actually saw something the other day that was like a profit protection strategy that I wanted to try. So maybe I'll try it on this one today. Maybe. I don't know. I always get what's one of the problems I have is that I'll always get distracted doing back tests and I don't go into the other stuff that I probably should be doing with my coding time. Anyways, was that good? For those of you that were here the whole time, was that useful? Did you learn something through all of that? I hope you learned something through all of that, right? Because what did we do? We back tested an order flow strategy that is like really, really common. We kind of showed the problems with it. We kind of showed how you can try to overcome some of those problems. But then we also showed the longer run challenges with backtesting as a retail trader, and particularly as it pertains to order flow backtesting, right? If this was a purely a price-based sort of a thing, then it would be a different story, right? Because then I would be able to go and backtest for the last 5 years and see how it performed and do really well. And I would be able to do a lot more backtests too, right? Then it's a different sort of a thing. And that would probably be more likely to work well in real testing, right? But look at this. Look at the Sharpe ratio on this. 0.06. It's terrible. Oh, but the Sharpe ratio on just the short trades is 0.62. So follow the FTX. Shows me hands, so that means that he likes it. Yeah. I hope that was really instructive to you guys. We did learn a few things about VWAP that we didn't know before, because I kind of had taken it a few steps further than last time I had done things. I just want to draw that picture of a face. Look at that. There you go. There's my... Listen, screenshot that, turn that into an NFT. You can take that artwork right there if you want. My little face. You want to NFT that? That's the I'm gonna leave that open. I think I'm gonna try doing some other things with it, because that's interesting. Some of those results are interesting. I don't know. Oh, this is a problem that I always have with order flow strategies, is that the order flow strategies that I come up with, when I backtest them for the first time over like just that year's worth of data, they always look really, really well. But then when I start to get more and more, I try and put it through the gauntlet more, I make it use, I guess in this case, it's using one tick data. So that fixes that problem. But, like you create a more granular bar series underneath so that the entries and exits are more accurate, and you test a bigger data set and stuff, and then they usually don't survive. And so that's kind of why I've never taken any of those algorithms to actually trade them. I'm probably too picky. Seems to me like there's a lot of guys that have been really successful in trading that are just as good as me, but they've been rewarded a lot more with it because they were a lot more willing to try and trade a strategy that wasn't perfect, and they had a lot, maybe more strategies combined together and stuff like that. Well, we still got a few minutes before we get to go. The S&P 500 is still getting, so this could dig its way out. Ooh, I don't know. So this is kind of curious. When you come back over, look at it on a daily chart, kind of gives you a really good idea, like when we really zoom in here, of what's going on, right? So we're failing, we failed the 50-day moving average yesterday and are basically extending down. And now you're kind of looking at that minus 10% drawdown from all-time highs again. The range in today is not all that extreme, but they could recover today. It could still recover today. They could bounce back up into the open, and if they get back up to here, this chart could turn positive really quickly. So from the way that technical analysis tends to read things, we're kind of at an inflection point where there could be a lot of misreads and stuff, right? From like a market sentiment stats perspective, though, it really seems to me like there is some enthusiasm problems here, right? Like people were really, really negative before. We had a little bit of a pullback here in the markets recently, but people are still kind of in the dumps. Now that can be a contrary indicator, but it really has to make you wonder because there are a lot of, how do you say, a lot of turbulence in the near future, from what I can see. You traded ES twice this week. Probably not the best idea for your blood pressure. Well, did you trade the ES or did you trade the MES? I can kind of handle the MES. I don't know. I used to be able to handle the MES, but now the ranges are just too much. For the last 2 years, the ranges have just been too much. Before that, it was a totally different story. Before that, it was like to get 16 ticks was like awesome. Now it's like you have to get, 10 points is the average market rotation. It's crazy. Too much. It's too much for me. You know what? Here in the treasuries, it's kind of starting to do the same thing. Like when we started this out, it was like, okay, $10 is like a really good day. And you know what? $10 is still a pretty good day. But a lot of these days you're making like 50, 60, $70, which is like, what? How are they moving so much? And you know what? It doesn't look like the treasury volatility is slowing down. They might chill out a little bit next week. Let's just see. Monday is going to be a very different situation from what we're looking at right now, right? Well, I really think that what happens today will be a pretty big reference point going forward. So let's just see what they do. But I don't have much other than that. Thank you guys for stopping by. If you're new, make sure you subscribe, click the bell icon so that you don't miss our future live streams. Always feel free to tell us, ask questions so that, I know what kind of information will be the most useful to you. Been talking to Follow the FX a bit. I mean, there's always somebody messaging me, but he's been the one this week. And, he's been particularly instructive because I'm like, oh, I should make a video about this and this and this. So thank you. I will see you guys Monday. And I should have a video out too. I got to remember to do my video editing this weekend. Okay. In the meantime, stay profitable, friends.